The Aussie market today, a little bit of a surprise considering we did get off to a negative start in trade and volumes were so light.
It was very light volumes, and the Aussie market did improve during the day after a very soft start this morning. But if we have a look at across the sectors, really the performance on the market today was the opposite of what we've seen across 2012. The standouts today were the cyclical sectors, while over 2012 the real outperformers were the defensive and yield sectors. So if we look at the standouts, consumer discretionary, very good performance today. Retailers performing well, particularly the department stores, up around 3% for Myer and David Jones. Media stocks also continuing their recent good form. I think with the consumer retail stocks, the Boxing Day sales figures that are coming through is a little bit of a relief for the market. I think the momentum of retail sales coming into December was very soft, so probably a little bit of a surprise result there. Iron ore stocks were another big outperformer today. Fortescue up almost 4% after it decided to recommence operations at its Kings project in its Solomon iron ore mine. But yeah, the underperformers today were the 2012 winners. The underperformers were the financials, the healthcare and the property sectors, which were the outperformers of 2012. And as you mentioned, volumes were very light, only around 1.2 billion traded on the market today. So that's in line, relatively in line with what we saw on that shortened trading day on Monday on Christmas Eve. But I think the drivers of the market today, after a soft start in the morning, we saw that positive Chinese data come out around midday. Industrial profits for the year through to November up another 22.8%. Asian markets also were a little bit mixed, but there were a couple of strong performances, notably the Nikkei, which was up around 1% as the Japanese yen hit two-year lows. But if we have a look at a two-year chart of the Australian market at the moment, the ASX 200, you can see this uptrend we've been in. At the moment, we've just come to the top of that trend where the peaks have been formed on the Australian market over the past year and a half or so. So we could see a little bit of resistance around this level, but there's not really a lot of economic data coming out of the Australian economy this week. So all eyes will be on the US and the global macro issues that are driving markets.
Just mentioning before that they have announced that they would restart those operations and the expansion at its Kings development. Just run us through it.
Yeah, well, these plans were shelved about 4 months ago when we saw a significant tumble in the iron ore price. The iron ore price in September fell below $90 a tonne, and this was a big deal for Fortescue, considering its debt levels and what this would mean for its earnings. But after the iron ore prices rebounded, Fortescue's worked towards improving their financial situation. They've been selling off some of their core assets, and they've been restructuring their debt. But this Kings mine is going to add around 40 million tonnes per annum, and this will assist Fortescue reaching their goal, which they've now moved back to 155 million tonnes per annum by the end of 2013, which they did decrease when they shelved these plans. But iron ore has had a significant run over the past month or so. It's rebounded back off those September lows by over 50%. To trade around $135 at the moment. And there's probably a good chance now that we could see iron ore remain fairly resilient. We did see comments from Fortescue CEO today that he expects iron ore to remain around $120 a tonne through 2013, but he did say he expects some volatility to remain. In terms of the halt in the project development, he also said that it's not going to affect the 1.1 to 1.2 billion cost of the development, and so moving forward, this is going to boost Fortescue's output once again up to the 155 level. But Fortescue, I suppose you need to remember that it is just a pure play on China. The correlation between Fortescue and the Chinese equity market is very, very close. The Chinese data today again suggested that the Chinese economy looks to have bottomed out, and that we could see a little bit of an increase in growth up to around the 8% level through 2013. So this move again is positive for iron ore in general. We saw other iron ore miners move up strongly today, along with Fortescue. Atlas Iron gaining 4%, Mount Gibson Iron gaining a massive 7% today. Even Rio up over 1%. So this provided some positive sentiment within the iron ore space.
Is this just a case of funds buying in following its inclusion on the ASX 200 recently?
I think that's probably the best explanation I can provide you with. I mean, it was up 9.5% today. A big outperformer. There was no news at all released in terms of the stock. The flagship asset for this company is over in Houston in Texas in the Blue Ridge Dome. They have both exploration and oil production over there at the moment. But as you mentioned, as of the close on the 21st of December, the end of last week, this stock has moved into the ASX 200 index. Now, obviously, certain investment managers and fund managers have mandates around the kind of investments they can make. Some are limited to which stocks listed in certain indices, well, maybe the ASX 200, ASX 100, etc. So I think with this moving into the ASX 200, it's going to generate more interest. So the stock rallied hard today, but volumes were very light.
Scott, weakening, albeit not against that yen, which has dropped so significantly, really moving in opposite direction to equity markets.
That's right. It was thin trading volumes across the Aussie dollar today as well, and it was trading in a very narrow band for most of the day. It's fallen back to sort of lows we saw in mid-November. Again, it met resistance earlier in December just around that 106 US cent level. But I think the interesting thing we saw today was, yes, the Aussie market was up and the cyclical sectors, materials, energy, industrial, were all higher, while the Aussie dollar drifted lower. And I think that was just a case of some strengthening in the US dollar. But fundamentally, there'll be a little bit of support from the fact that the yen has fallen to 2-year lows. Again, the key factors in coming days will be the US fiscal cliff negotiations. As I mentioned before, there's really no local economic data out to drive the Aussie dollar, so the focus will certainly be global. I think the chances of a compromise or a comprehensive deal have gone now before the end of 2012, but the chances of a deal coming through in the first couple of weeks of 2013 is certainly still there.